Hello, you're watching Thinkeconomics. I'm joined today by journalist Max Keiser. Max, thank you for having me in the studio today.
Hey, mi casa es su casa.
I found it quite hard to describe you because you're not just a journalist, are you? You've been a stockbroker, you've been a comedian. How would you describe yourself?
Well, I'd say most of my professional career has been in business in one way or another, either starting companies, managing companies, reporting on companies as a journalist. So it's all really around business going back to about 30 years.
What your show quite often does is break down some of the terminology used in economics and finance. How important do you think it is for people to have a knowledge and understanding of economics?
Well, I think, as you point out, we try to break down the language that's used in the financial media and in the financial press, like the FT or the Wall Street Journal. And it's important to understand the terminology, which is constantly changing. They'll describe similar things, but in different language all the time. So at least to get an understanding of what the baseline story is, and not to be thrown off guard by the use of different words and different things. Quantitative easing is a phrase that came up and is very popular and used quite often. And what does it mean? What does it refer to? And what will be the next iteration of something like that? Or a bailout and a bail-in. And these are all ideas that are repeating. And what's the baseline? What's kind of been the history of banking and finance and economics a little bit, and so we try to give folks a way to make it more accessible to them by kind of just like delving into the language and breaking it apart a little bit. So and I think the feedback's been great. You know, people say that they have learned a lot about economics watching the show and finance. I think it goes back to my background as a stockbroker working on Wall Street, dealing with retail customers. You have to be able to talk to people who are not necessarily fluent in finance and economics, and you do this for years and years, and you get to be good at talking about concepts, financial concepts, to retail clients. And so I've kind of used that in the journalistic space.
Your show is very opinion-based, but when it comes to economics, obviously there are so many different perspectives. How can anyone be sure that their perspective is the right one?
Well, what people should understand with economics, it's not a natural science like chemistry or something like that, where there are experiments that you can do to prove theorems and hypotheses. Economics doesn't qualify as that. All the experiments produce different results all the time because it's not a hard science, it's a soft science like psychology. And so a lot of what ends up being economic reality is shaped by people's perceptions and how those perceptions are magnified over the mass media. And in the US they have like CNBC is a cable network that broadcasts their view of reality in the financial space. But it's really it's just an opinion of theirs. There is no absolute truth in markets and finance. Up until we saw the emergence of Bitcoin. Bitcoin is actually the first scientifically proven or scientific discovery in money and finance ever in the history of money and finance. It's the first time. It's kind of like the E equals MC squared of money. There's actually scientific basis for Bitcoin now. So now I think this will completely change finance and economics going forward. But up until then, economics has been pretty much who has the loudest megaphone has created the perception of what we call economics. So the prevailing view is very much lopsided in favor of the CNBC in the U.S. or what you might see on BBC here in the U.K. So we try to offer an opposing view to at least balance things out.
So what is Bitcoin?
Well, it solves the problem of double spending, is how it got created on the internet, where if you had a digital currency, you could conceivably spend it in two places simultaneously, and that was a problem. So the developers figured out a way to have all transactions carry with them all verifications of all transactions in something called the blockchain. And when you join the Bitcoin protocol and you're part of that verification network, you get tokens in exchange for putting up your computer CPU, essentially. And those tokens had developed a life of their own. They became Bitcoin, and now they're traded as a currency.
You mentioned different perceptions, and more often than not, inflation is perceived as being quite negative and damaging to the economy. And this can be the case when wages struggle to keep up with the rate of inflation. You've also spoken on your show that inflation is not always a bad thing and that it boosts the economy. Could you give me a definition of inflation, and can it be beneficial?
Well, this is a great example, because if you ask 10 economists to give you their definition of inflation and deflation, you'll get 10 different answers. There's no definitive answer to what is inflation and what is deflation. You can't do an experiment to prove inflation and that it'll come out the same every time. That's a perfect example. That doesn't exist. There's no definitive definition of inflation. I can give you, what I believe is the biggest confusion of the past 2 or 3 years has been understanding this word deflation, because the deflation, as we see, which has been more or less a contraction in the money supply. I mean, I think there's a school of thought that would posit that inflation and deflation are relating to money supply first, and then the price action and wages are secondary. And that makes a lot of sense. And in the case of the banking crisis of the past 10 years, where banks' balance sheets are crumbling, it's because there's deflation in the banking system, or the shadow banking system, or the ancillary financial markets. All these derivatives and other instruments are collapsing in value, and so the central governments, they'll go on and the TV and they'll say, we have a deflation problem, so we're going to keep interest rates near zero. We're going to keep monetary policy, lax, because we're going to try to create inflation, which they're not successful, because there's still this implosion going on around the world of these the banks' balance sheets, that they're trying to keep them alive, really, by just pumping money. But the banks are not lending that money out, which would then create some kind of GDP growth, some kind of inflation, some kind of economic activity. They're just hoarding the cash because their balance sheets are full of securities that are deflating in value, that are just going bust, that they're worthless. And this extends to the central banks themselves. The central bank here in the UK, under Osborne, it went from 400 billion I forget the exact numbers, but they've increased their liabilities by 400 or 500% by just assuming them from the banks, which is again an attempt to try to create some inflation. So and they've been unsuccessful, because you still have wages are still not keeping up with prices, although in the last quarter you do see wages kind of matching what they would quote as inflation. They use the government statistic for inflation, the basket of goods and the CPI, et cetera, and they'll say, well, this is about, you're starting to get some parity there. But again, this is against a background of enormous debt escalation. The British economy, the long-term debt, the national debt is 1.6 trillion pounds. Osborne added £1 trillion in debt just under the coalition government. So this is all basically the credit card of the country is being run down, being abused by the coalition government.
At what point does inflation become damaging?
Well, I've never said that inflation's a good thing. I mean, I'm not. Inflation is not a good thing, because you're losing your purchasing power. It's a form of wealth confiscation. I would more adhere to like a gold standard, where you have the ability to close out transactions against something that has value, that people understand what that value is. Gold versus the current system. Since 1971, we've been on a purely fiat currency system where there is no actual collateral that has a value that anyone can really agree on. It's just all basically theories about what value might be in certain situations, but there's no actual, it's not tied to anything that has an intrinsic value that you can say this definitely has a specific value. So when you go off the gold standard, you lose all ability to have an economy where there's true price discovery, where there's actual comparative pricing that you can do. And you end up in the situation you have now, where it's all basically you just relying on the perception to be managed by the government. It'll say, we perceive certain things are going to be happening. We're doing policy based on our perceptions. And I mean, look at this current situation. The price of oil has collapsed, and the government is running with the story more or less that, well, people have more money to spend in their pocket because it's cheap, the oil is cheaper. And yet, this means thousands of jobs are being lost in Aberdeen, where the UK oil industry is headquartered. So again, they're trading manufacturing jobs, labor jobs, real jobs, real wages, industrial strength. They're swapping that for retail and people going into debt and deeper into debt to buy stuff made overseas. So this has been the focus for years now. So once again, they're swapping real jobs, real industrialization for indebtedness and shopping. The North Sea oil is collapsing. That whole industry is collapsing. That's not a good thing. Why is it? Because there's no inflation, there's no demand, because all the policies did not create what they wanted the policies to create. They didn't create the inflation. There's no wage growth. Why? Because all that money, as I've been saying, just goes into the banks, and it just sits there to keep insolvent banks from having to declare bankruptcy, which is not even capitalism. That is some zombieism.
Could you explain the term quantitative easing?
Well, quantitative easing is when the country monetizes their own debt. But the reason they don't call it debt monetization is that they say, well, we're going to unwind it someday. So we're going to call it quantitative easing. But it's not debt monetization. Because if you said it was debt monetization, that is to say that the government issues debt and then buys it back, which is what they're doing, then everyone knows that debt monetization is what you have right before a currency collapses. So we're not going to call it debt monetization. We're going to call it quantitative easing. Because under our theory, at some point we can unwind all this activity, and the government can just dump their bonds onto the market, and everything will be gone, and it'll be all off balance sheet. Nobody noticed it. It was benign.
Would you say quantitative easing is deflationary?
In my opinion, it causes deflation, because you're just keeping alive these four big zombie banks that should have died 4 or 5, 6 years ago. They should have been completely scrapped, and they should have allowed new banks to take their place, and there should have been competition. Free market competition is good. Keeping zombie banks alive by going trillions of pounds into debt is bad.
So what are zombie banks?
Their balance sheets are encumbered with debt to the point where you cannot say by any definition that they're anything but insolvent. HSBC, Lloyds, Barclays, Royal Bank of Scotland are insolvent. There's nothing, they just have debt. They have no assets whatsoever. They're insolvent. They should have been allowed to go bankrupt in a free market system. But instead, because of their lobbying powers, they've been kept alive. They are dead, but the transfusion of this quantitative easing, keeps the heart ticking, but they're vegetables. They're in a vegetative state. They should pull the plug and let them die, euthanize them. That would be the greatest thing for this country. You'd create competition, you'd create jobs, you'd create growth, it would solve most of the problems in the UK economy that plague the UK economy today by getting rid of these 4 major impediments to growth in this country.
How would they go about doing that? Because obviously there are so many people with accounts at these banks.
Yeah, exactly. The government steps in, nationalizes all 4 banks, they close them, they fire everybody, and they allow 10 or 15 banks to take their place and to start competing as banks, institutions that take deposits and make loans, not institutions like RBS that's been caught targeting through their auxiliary company, the Global Restructuring Group, where they actually target companies. They dismantle them, they destroy them to try to make money to feed the zombie, the vampire, by killing small to medium enterprises in this country. RBS is not only a weakling that should have been euthanized long ago, but it's out there actually destroying companies to suck on the blood of these dying of these companies that they're killing. It's a plague, essentially. It's a financial plague.
You quite frequently refer to bankers as terrorists. How do you justify that?
Very simple. Look at the terrorism. The fanatical religious extremist will misquote their text, the Quran, cherry-pick quotes to justify what they do. Same thing with financial terrorists. They cherry pick Adam Smith. They don't read Adam Smith plus his theory of moral conscience. They just read a few things from Adam Smith or a few things from Keynes to justify their financial jihadis. In the extremists, religious extremists, they're willing to kill themselves and others for their belief. Look at these banks in the city of London. They're jumping out of buildings all the time now. They're killing each other for the insurance money. They're willing to blow up the economy for their ideology. That's a terrorist. That's what a terrorist does. They have, the list goes on. I mean, I've prepared an analysis of this. I mean, but essentially, they're cut from the same cloth. They're identical. The people who run Barclays and the people who run ISIS, they're the same mother. Essentially, they have the same mindset. They're willing to kill themselves and others for their belief in an ideology of profit versus a profit. It's essentially just a slightly different spelling, but they're essentially the same characters, and they do more damage. The four big banks in this country have done far more damage than any terrorist organization anywhere you could point to, by an extraordinary percentage. But there's not even a comparison.
Thank you very much.
Sure.